Micron Technology reported quarterly financial results on September 25th that sent the stock price higher by double digits. Not only did the company report revenue and profitability at the higher end of their guidance, but they also forecasted robust demand for its products heading into fiscal year 2025 and calendar year 2025. Those two can be different. So in this video, I wanted to go through the latest discussion from Micron Technology's management team to try and understand a little bit more deeply what's going on with Micron stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Micron CEO said that in the fourth quarter, revenue at the high end of our guidance range and gross profit margins and earnings per share above the high end of our guidance ranges. So whatever the company thought they were going to deliver in the fourth quarter, it was even better than what they expected. Sometimes, especially for gross profit margin and earnings per share, it was even above what they were considering as a possibility in the quarter. That's how well the quarter progressed for Micron Technology. Even though coming into the quarter, the stock price was down significantly, meaning that investors and the stock market participants expected worse than forecasted performance from Micron Technology, but they came in at the opposite end of that. They delivered much better than expected performance in the quarter. It's rare where the market and a company are so out of whack, where the market got it so wrong, where they thought it was going to be very, very bad, but it turned out to be better than expected. Now, this is on the back of rising effectiveness of artificial intelligence, where Micron Technology is only now beginning to participate in that huge increase of investments in data centers optimized for AI. So I mentioned in the introduction that not only did the company deliver performance at the higher end of their guidance for the current quarter, they're also forecasting the good times to get even better in their next fiscal year. Management says that we are entering fiscal year 2025 with the strongest competitive positioning in Micron's history. The robust data center demand is exceeding our leading-edge node supply and driving overall healthy supply and demand dynamics. Boy, I love to see that from a company that I have rated so highly when they start talking about demand is in excess of supply. That's music to an investor's ears. The reason for that is it gives a company pricing power, and it gives a company room to expand production to meet that demand. It's always a good sign when industry supply and demand is working in its favor, especially if it's working in a specific company's favor. That's been what's happening with NVIDIA over 4 to 6 to even 8 quarters now, where demand for its products are in excess of supply. And even though NVIDIA continues increasing supply, demand keeps growing faster than it can grow supply. And I'm starting to see similar dynamics here with Micron Technology, starting with this statement with the CEO saying that the leading edge node supply, not supply for the entire company, just for the leading edge, demand for those nodes are in excess of whatever it can supply. But they're working on increasing supply to meet that higher demand. Additionally, the company expects a broadening of demand drivers, complementing strong demand in the data center. And this is what I've been expecting from Micron Technology for some time now, is for it to participate in the data center AI boom, to be sure, but also in its other markets, like the PC, like mobile. They have an excellent position in that market, but that market, the inventory supply dynamic was not working in its favor. But it's starting to at the end of 2024 and beginning 2025. Demand in those industries are expected to increase more meaningfully than in 2024. And that's going to be great news for Micron, as it's going to add other categories that are fueling demand for its products. It won't be just in the data center, but the data center is the primary driver right now, and I expect it will continue to be a primary driver of growth for the industry. Management saying that we look forward to delivering substantial revenue records with significantly improved profitability in fiscal year 2025. Again, more music to Micron investors' ears. Not only the company performed excellently in the current quarter and in 2024, increasing revenue by 10 billion, increasing cash flow meaningfully, but they're expecting to set further records in 2025. Now let's get to some of the company's technological innovations. Micron saying that it's ramping production of the industry's most advanced technology nodes in both DRAM and NAND, so both memory and storage. DRAM pilot production using the EUV lithography is progressing well and on track for volume production in calendar year 2025. Additionally, they expect fiscal 2025 DRAM front-end cost reductions, excluding high bandwidth memory, to be in the mid to high single-digit percentage, and for storage cost reductions to be in the low to mid percentage range. So, excellent news here on both fronts. Micron is not only an innovative company delivering new products and technology, but it's also a manufacturing company. It doesn't outsource the manufacturing. It has it in-house. So both sides are important to investors. You want to see the company develop new technology. You also want to see the company be able to produce that technology at lower and lower prices as it increases scale. And that's precisely what you're seeing with Micron Technology. It's coming out with innovative next generation DRAM memory technology, which is proving to be crucial for data centers optimized for AI. But at the same time, it's also lowering costs of production for the entire rest of the business. And then, of course, the HBM side, not just yet because it's still in early stages, but given its proven ability to do that to lower costs in other areas, in other technologies, it wouldn't be surprising to see them develop that level of cost improvement on the HBM side when it grows to a larger scale. So cost reductions, mid to high single-digit percentage range for DRAM. So mid to high single-digit percentage, if you're not already aware, would be anywhere between, let's say, 6, 7, or 8%. Mid to high single-digit percentage. If it was high single-digit percentage, they would say that would be 7, 8, or 9%. Mid to high single-digit, you can eliminate the 9%, the higher range, and you can include 6% from the mid-range. So 6, 7, or 8% is what Micron is expecting in cost improvement for memory. And then for storage, they're expecting low to mid-teen percentage range. So you could think of that as 11, 12, 13% range, maybe even 14% range improvements for storage. So meaningful improvements in cost there from Micron, and at the same time, they're expecting demand to grow robustly. So you can understand why after these results were released and after investors saw these discussion notes from the management team, why the stock price is up so much. As a reminder, I've had Micron stock rated as one of my top stocks to buy this year, and following these results, I reiterated that recommendation. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.